What's up, my crypto people? Thank you for tuning in. Today I will be starting a brand new series called Crypto Trading for Beginners, so let's dive right in. So in front of me I have the crypto exchange MEXC, MEXC.com. Here you can trade several crypto pairs. You can get an account for free and even start trading with $1. So let's have a look what we have in front of us. So MEXC is a Europe-based crypto exchange. And if you reside somewhere else, you can just Google which crypto exchange is the best for you, since most of them have almost the same user interface. And if not, you can move, most of the time you can move the panels around. So let's start on top here. Here we have the crypto trading pair Solana USDT. At this moment they have a bargain where you can trade it for 0 fees, and they have several other crypto pairs that you can trade for 0 fees at the moment, but most of the time they have Solana USDT trading pair for 0 fees, so that's why I like to trade it. If we look down here, we have you can see 1 minute, 5 minute, 15 minute and so on. Those are the time frames that you can set. So my time frame is currently at 1 minute, and based on that time frame the candles are shown. So each candle at this on this chart is 1 minute. And let's zoom in on one of these candles. So if we look at, for example, this green candle here, green candles are when the price is going up, and red candles is when the price is going down. So if we look at that candle, we can see it has a candle body and a wick on top. So the opening of the price started at the bottom of this candle, since it's a green candle going up. And then it went to an extreme, so that created that wick, and then the price retraced a little bit, and then it closed at the end of the rectangle. So a candle has a candle body, and the extremes are the wicks. So in this case we only had the price going a little bit further up and then going down back and close the candle. So that's how you can read and have a lot of information based on the candles you're seeing on the screen. So if we move a little bit more to the left here, you can see we have an order book. And in this order book we can see the buyers and sellers at this moment. So the red digits are the sellers and the green digits are the buyers. And at this moment they're battling for the price, so it's at 88.82. And the more buyers you have, the price starts to go up, and the more sellers you have, the price starts to go down. So that's the order book. And if we go more to the right here, we have our settings for placing a trade. So if we look at the top here, you have this is called isolated. Isolated means that you're only trading with the money that you have on your current account. So you have 2 accounts on MEXC. You have a futures account and a spot account. And when you set this on isolated, it means you're only trading, since I'm trading on the futures account, only trading with the amount of money I have on my futures account. And you can see here you have 60x, so it means that I'm trading with a leverage on my futures account of 60x. So for example, if I would have $1,000 on my futures account, then it would be as if I would be trading with $60,000. And if I place a trade, it 60x's my amount, so that I can make more gains. But the other side is, if the trade goes haywire, and instead of, for example, going up, the trade is going down, then you're also losing 60x the amount of your trade. So if we look down further, we can see here we have limit and market. So limit means that you can, for example, at this moment the current price is around that 88.90 cents. You can set and place a trade, sort of an order, that when the price goes, for example, to $85, then it opens your trade. So that's how you can set a limit. And market is that you're trading against the current price, and I like to trade directly and open my trade directly. So that's why most of the time this is set on market for me, so I can start trading directly. So if we look further down here, we have, for example, the green and the red button. The green button, opening along, means you're opening a trade expecting the price to go up. And if you use the red button, opening a short, is you're expecting the price to go down. Both ways you can make gains if the price goes in the direction where you're expecting it to go. So for example, if you open a long and you're expecting the price to go up, but the price starts to go down, you start to lose money. And if the price goes down a lot, you can lose all your money that you've added to that trade. So that's why we can protect ourselves, and we can protect ourselves by using, for example, a stop loss. So in this case, it's set at 10%. So for example, my current account has around $200. If I open my trade with, for example, 100%, so if we can look here, we can see it's 100%, then I would open my trade. And if the price starts to go down and it goes further than 10%, then it stops out the trade, and I only lose 10% of my trade. So if I would have traded with $200, it means I would lose a maximum of $20. On the other side, sometimes the price goes really fast, so you can also set, for example, a take profit. At this moment it's also set at 10%, and that means that if the price moves 10% upwards and then hits that take profit line, then it also exit the trade, and then you would have made, based on $200, you would have made a gain of $20. That's the 10%. So if we go a little bit further down here, and let me move myself to the other side, there we can see we have this part where you can do a transfer or a deposit. And transfer, let me open that part. Here you can see that I have, let me zoom a little bit out, you can see what's happening. So when I clicked on transfer, it opened up this dialog box, and there you can see that currently on my spot account I have like almost $1,200, and I can move, for example, from this spot account to my futures account. And on my futures account I currently have like $200. So as a beginner trader, most of the times we don't have a clue where the price will be going. To have a little bit of an idea where the price is going, you can add an indicator. This is the symbol here, FX, and let's open up an indicator. So here you can select several indicators. Let me zoom in a little bit on this one also. So for example, MA means moving average, BOL means Bollinger Band, and SAR is the abbreviation for parabolic SAR. We confirm them. And now you see on my screen there are several other lines here on my user interface. A white line and the yellow line are the Bollinger Bands. So the white line gives like an average of where the price is going, and the outer yellow lines are like the extremes where the price will be going. So then you have like, you can gauge where the price, if the price will be continuing going up or either going down. Green and red line next to each other here, those are moving averages. So in my case, I'm using the moving average 8 and 9. And they're really close to each other. And when the green is above the red line, most of the times the price goes up. And the other way around, the price goes down. And then we have the red dots and green dots, and those give you an indication when the price starts to flip. So when you see the green dots start, then the price starts to go up, and when you have the red dots starting, then the price goes down. So just for the fun, let's open up a trade so you can see what I mean. So currently the price, I will set this at like around 20%, and then my take profit, the stop loss are both at 10%. And let's see what's happening here. It seems like the candles are going down, but the price seems like it wants to go up a little bit further. So let's open a long just for the fun. So confirm that we have a long, and now we can see the both lines. So we can see here that the price started to go down. We opened up a long, so let's see and wait what the price will be doing. So since I opened up a long, down here is my stop loss. If it hits my stop loss, then I will be losing the trade, and if it goes upwards, then it shows me that I will be making a little bit of a gain. So let's wait and see what the price will be doing. And you can also move your stop loss. For example, if the price starts to go above that green line, then I will be making profit. So you can see now it moved above that line, so I will be moving my line above and say it's okay. So that's now I can protect the gains I will be making. So it closed the trade, and I made a little bit of gains there, but that's just to show you how you can open up a trade. What most professionals tend to do is use tradingview.com. Tradingview.com is specialized in indicators. You can get a free account there and have 2 free indicators. And on top here we can see we have the same time frames as we had on the exchange. And if we click on this icon, we can add several indicators. So with a free account, it's only a maximum of 2. I have a subscription, so I can use several other indicators, but 2 of the most used indicators, one of them is called the MACD, moving average convergence divergence. If you double click on the name, then it adds it to the user interface. And the second one is the RSI, so relative strength index. Those 2 are the most used, most common indicators. I have them prepared for you guys. So if I double click here, so in front of me I have the MACD and the RSI. So this one is the MACD, and below here we have the RSI. So what the MACD does, it has 2 lines, and the blue line is called the signal line, and the red brownish line is called the MACD line itself. So when the signal line crosses above the MACD line, then the price tends to go up. So this is a better example. Here it crosses up, and then you can see the price went all the way up. And the other way around, when it crosses down, you can see the price started to go down on this red part here. The histogram, so these green bars and red bars, give the strength of the price movement. So you can see dark green, the price moved up pretty quick, and light green, it says that the movement is losing steam. So the green bars only show that the price is going upwards and that it can lose steam. It doesn't mean that when it's light green that the price is going down. So take that into account. It's also the same vice versa for the red bars. When the bars became red, then the price tends to go down, and when they became lighter, the movement was losing steam. In this case, it even went up the other way around. But sometimes it turns a light red in this example, for example, but the price still is going down a little bit further. It's just giving you if the strength is there or not. If we go down here, we have the RSI. These green areas, they call them, when they're on the top, that the buyers are losing their strength. So they call this oversold, and when it's oversold, the market tends to go down. So this in yellow signal line shows you that the price probably is going down. So As you can see here, it shows that it's going down, but then it went away up, a little bit up again. So take that into account. There is no indicator that is flawless, so that's why you use several indicators to make a final decision if you're going a long or a short. So that is in a nutshell how the RSI is working. If we go a little bit back here, we have, for example, that it's red. So here it says that it's oversold, and then the price tends to go up again. You can see the yellow signal line going upwards. There is also another way you can read this RSI. When these lines are above the middle line, then you can say that you only take longs because it's above the middle line, and when the lines are below the middle line, then you only take shorts. But that's a way of how to interpret this indicator. There are several other ways to interpret this indicator, but that's just to show you the two most well-renowned indicators. People use these a lot. Since I have a subscription, I can select even more indicators. So let's just for the fun select the third one. Let's select this one, Copado confirmed super trend flags. And then you can see in the background it already loaded this indicator. And this indicator gives you this green line and some signals. For example, this flag says you should short here, and here, for example, this green flag says you would have to do a long. And in this example, it took a little time to go down, and here it started to go up also. So it's a matter of looking at several indicators together to make a final decision, since no indicator is without flaws, and based on the indicators that suit you the best, you can make your decision on going either long or short. So that's in a nutshell about indicators on TradingView. Here is an example of how my trading setup would look like. So on the left top I would have TradingView open with my indicators. And then on the right side I would have my exchange open where I'm trading. So based off these indicators I would make my decision if I would open a trade or not on the right side. Some fun. So what I did, I made the calculation that if you would start with $40 and would like to trade until $1 million, then it would take you 512 trades. You should be trading futures with the 20x leverage and then 2% per trade. Each trade at least 2% all in. So everything you gain, you put it in again. And then with a 100% win rate, it would take you 512 trades. Starting with $40, the first trade, you would make 80 cents gains. So that would seem like it's almost nothing. But if we go down here, for example, you can see that 80 cent with trade number 100 and you're trading with $1,300, then each trade is at least $27. And if we move on, then we can see if we go all the way down here, for example, let's take $526,000, then each trade 2% is at least $10,000. And if you would have made it until the end, 512 trades, that would mean that you would have gained $1.01 million. Then you would have been done. Trading with a 100% win rate over 512 trades is very difficult to do, but let's say nothing is impossible. I hope you enjoyed this tutorial. Please let me know down in the comments if you have any questions. If you would, for example, would like to have this page, I will put it somewhere where you guys can download it. And as always, like, subscribe, get the vibe, and I'm out.